Imagine every time a client walks in and says, I have bad credit, you know exactly what to do. I've had people walk in with 600 credit scores, 500 credit scores, even 400 credit scores. Being a top salesman since I was 21, so over 5 years, I also studied finance constantly. When a client would come in and they had bad credit, I learned exactly how to give them a second chance and get myself a sale. In this video, I'm going to give you 3 things that you must know to get any client approved or even yourself. First, you must know how finance works and why banks approve loans. It might sound difficult, but it's very simple. Let me ask you this question. Why is it so hard to get a $1,000 credit card, but somebody can come in and buy a $20,000 brand new car? It's because the credit card, if you max it out, it has no value. It's a piece of plastic. They can't take it back if you stop making payments. But if you stop making payments on a car, the car has value and the bank can take it back. It's called a repo. Stay with me, guys. I guarantee by the end of this video, you will be a pro and you'll know how to get anybody approved. Yes, bad credit is high risk, but that's only one factor. If you make everything else low risk, your client will get approved. Interest rate and getting somebody approved is based off of how risky the deal is. So the bank knows the car that your client's buying, they know what that car's actually worth. Okay, so after, seeing what the car's worth, in this case, let's say 10,000, well, now you have your taxes, maybe dealership fee and a tag. Okay, so let's say your client's at 12,000 out the door. The bank's gonna say, no way to this guy. They're gonna say no credit or maybe missed payments or a repo. Well, if they stop making payments on this vehicle and we go to take it back, this car is only worth $10,000 and they owe $12,000 on it. That's also high risk. So the credit's high risk. And now if the bank wants to take back the car, it's worth 10 and they owe 12. So that's also high risk. That's why you must sell this client a very inexpensive new car with tons of discounts and rebates. The more discounts and rebates, the better. So the reason for doing this is the bank sees that the new car is worth right around MSRP. Okay, they don't take in mind all the discounts and rebates. Back when I was selling cars, we would have discounts and rebates that were anywhere from $5,000 all the way to $10,000. So you're gonna be so far under MSRP. Let's say MSRP is $25,000. Well, after taxes, tag, even $3,000 of negative equity, you could be at $20,000 out the door. So the bank says this car is worth $25,000 and they only owe $20,000. If we take it back, it's worth more than what they owe, so it's very low risk for us. So it's simple. The bank wants the car to be worth more than what the person owes on the car. So if they have to take it back, they're not in a bad situation. The person has equity. That's a good thing for the bank. So somebody with a 600 credit score, let's say, comes in. The bank wants the car to be worth as much as they owe on it. If it's worth 25 out the door, they have to be at 25. Okay, if it's at 27, you need $2,000 down. But on somebody with really bad credit, you must be way less than MSRP. Let's say you sell them a car that's $20,000 after taxes, tag, negative equity, everything, dealership fee. This client must be at like $16,000 out the door. So if MSRP is 20, they gotta be at like 16 out the door. The lower you are under MSRP, the better chance they're gonna get approved. Now guys, wait, there's 2 more things I gotta tell you, so don't click off the video just yet. You gotta make sure that the client's income matches the payment. So if this client comes in and they make $3,000 a month and they're looking to buy a $20,000 car, so they make $36,000 a year and they're trying to buy a $20,000 car. The banks might approve it, but if they have a $1,400 mortgage or rent payment, you're gonna put that on the credit application. So there won't be much left over for the car payment and they won't get approved. Now in a situation like this, I would switch them to the cheapest, newest, used car that I have. So maybe a 2018 with 10,000 miles. Now, yeah, I could put them on a cheap $10,000 car and hope that they get approved because it's just a small amount of money, but the bank's not going to approve them because that car's not under warranty. It has high miles, it's older. It's 2019, that's 7 years old. So if that car breaks or something happens, the bank doesn't know if that client is going to fix the car, if they have the money to do it, or if they're just going to stop making payments and repo the car. So when you put them on a new car or even a 2018 with a little bit of miles on it, the bank's going to say, if something happens to this vehicle, it has low miles, it's a newer car, so most likely nothing's going to happen. But if it does, it'll be fixed for free because it's covered under warranty. That's also low risk. So whoever walks in the door, no matter what their credit score is, treat them like they can buy a car. Just make sure to put them on a car that they're way lower than MSRP. So know your cars that have all discounts and rebates. Next, make sure that that car fits their income. Then make sure to put them on a newer car. If it's not brand new, make sure it's an 18 with low miles. Also a vehicle with warranty. If anything happens, it's fixed for free. Keep it as low risk as you can. Just because somebody comes in with some bad credit, that's high risk. But if you lower the risk everywhere else, you're gonna have yourself a car deal. Now guys, make sure to do me this one favor, and that's share this video. If you don't, you won't get anybody approved. Thank you very much and have a great day.